morning, all. The first time I traveled to Vancouver in January for a conference like this, I think was almost 20 years ago. That was the last bull market. Who of you is following me on Twitter? Half of you. Who of you read The Big Reset? Only a few. Okay, well, let's jump in. The Big Reset was published in 2014, translated into 8 languages, and it was titled The War on Gold and the Financial Endgame. I will explain a bit more about that, and I always loved what Eric Sprott had to say about this book. 20 years ago, when I first came here to Vancouver, I was still a market commentator for Dutch TV. But I was a private investor and started to invest in precious metals and commodity plays around 2002, 2003. And I started writing about everything I found out about the precious metal space. And I was so surprised. Yeah, sorry, this is in Dutch. But I started to write my first columns in Dutch in 2002. And I was writing about the manipulation of the prices of the gold prices, precious metal prices. And I was very influenced by GATA, the guys of GATA who were exposing the manipulation of gold. And that really attracted me to this industry, because if there's a manipulation ongoing in gold and silver prices, the price can go up a lot when the manipulation ends. So I'll touch more on that later. I had to wait 17 years to, to find some recognition that indeed JP Morgan's metal desk was a criminal enterprise, and these guys have been playing the markets for a long time. I started to invest in discovery plays around 2005. I first had a newsletter, a Middelkoop Discovery Alert, a news service. I gave stock tips to investors like yourself, and my best tip was Aurelian Resources, which went up 1,700% after discovering Frutal del Norte, the discovery in Ecuador. It's a gold mine now. And then I had a banker friend, and he said, "You're stupid, you're selling your best tips for $150. You should start a fund." And that's what we did in the end. And I've been working for the last 20 years, 17 years, almost day and night, in finding the best new mineral discoveries worldwide. And it all became very serious after Lehman crashed. I stopped working as a journalist, as a market commentator for Dutch TV. I started 2 companies. One was a bullion web shop. We store a lot of silver and gold in the Netherlands. I sold the bullion web shop after 3 years. And I decided to focus on the Commodity Discovery Fund. I started the fund in 2008. Our philosophy is to invest in the best discoveries worldwide. We ignore all the crappy ones. We only focus on the top 100 best discoveries worldwide. Metal agnostic. The best lithium plays, uranium plays, gold plays. We have over 2,000 individual investors. We're open for all, even Canadian investors. We have over 100 million assets under management, euros. So there's like 150 million Canadian. And we've had, like I told you, we invest in the best 100 companies worldwide, and we had over 80 buyouts, so companies being bought out after we made initial investment. We founded the Commodity Discovery, the CD Fund Discovery Award in 2020, handing out an award for the best mineral discovery worldwide. You see one of the few names who've been the winners. First 10 years we only focused on North America and Canada, but we learned that the best discoveries are being made in Australia. So make sure you have an international account with Interactive Brokers so you can trade all markets, because the best discoveries are sometimes down under. We organize a Discovery Day in Amsterdam every year, in which we invite the best companies working on the best and most significant discoveries to present their story, and that's where we give out the award. But I made one huge mistake. I started the fund in 2008. And it was the top of the last cycle. So sometimes discoveries, or sometimes commodities outperform the general market, but sometimes, like the last 13 years, the commodity space, the resource space, underperforms the general market. But I have some good news for you. We just bottomed out. And I think we're near the end of a very long correction, a very long bottoming pattern. And we might well be witnessing the start of a new long uptrend, much stronger than the recovery we've seen in 2016 or 2020. Here you see our AUM. We have had net positive inflows into our fund every year. Even last year we had net inflows into our fund. And we see many of our peers struggling because they have redemptions. And because of the redemptions, they need to sell their positions. They don't want to sell their positions, but they need to sell their positions. And that's what brings this market down lower and lower. But it's also the reason why we'll see a huge recovery rally, probably starting this year and working its way in the years to come. Although we've had a very long bear market in the resource space, we've had 4 wonderful years with gross returns between 70 and 90%. And this clearly shows what happens when a correction is over and the recovery rally starts. As told, we focus on the best and most significant discoveries worldwide. You can find this map on our website. These all have been projects which we have invested in and have seen a buyout after a few years, because major discoveries will always buy out an exploration company which made a significant discovery. And actually, if you look at the list of buyouts we've enjoyed over the years, it's pretty remarkable. On average, we have 6 buyouts in our portfolio every year. So you see a constant process that the major companies are looking for new discoveries, new reserves. So if you keep investing and keep specializing in the most significant discoveries worldwide, you always do pretty well. But you'll do much better in a bull market. This is a study by Crescat, and it shows what kind of premium companies are paying when they take out a exploration company after they made a new discovery. If you have a buyout in a bull market, the average premium is 36%, or it's the average value being paid of the metal value. And if a buyout happens in a bear market, there's only a poor 8% of the value being paid to the investors. So there's a big difference if you're investing in the space in a bull market or in a bear market. So we were very unfortunate to start at the top of the last cycle in 2008. We should have started our discovery investing strategy, our discovery investing fund now. Because as you can see in this graph, this is a visualization of the valuation of commodities compared to the broader market. And in 2020, we've seen the lowest valuation for the commodity space in 120 years. And it's amazing how many people still turn out here. I think we turned the corner already, and the next bull market might surprise many. What's our strategy? Our strategy is the value creation due to the fact a significant ore body has been discovered. Pre-discoveries, these companies are valued less than 20 million. After a discovery hole, you see them jump to 50 to 100 million. And when it becomes a tier 1 or tier 2 discovery, these companies have a huge run towards $500 million, 1 billion, or even more. Look at NextGen Energy, the best uranium discovery 10 years ago, valued at 4 billion now, started at 30 million. Another example of a great discovery in recent weeks or recent months is Hercules Silver. They found a copper porphyry in Idaho. We started buying the stock at 38 cents the day after the discovery was published. We've seen a huge pullback in recent weeks, and I think that's a great opportunity to build your position. We've grown our position quite strongly, around 70 cents. The good thing about discovery investing, if you're investing in a winner, Great Bear is another example. We've been invested in Great Bear. They were taken over by Kinross for almost 2 billion. When you have a run like this, you have many retracements of 40, 50%. So just like we've seen with Hercules, retracement of 50%. Often these retracements are wonderful opportunities to add to your position once you decided that this is the real thing. Here you show the land position of Hercules Silver. You see where the discovery hole is positioned. Discovery hole was published in October. And the remarkable fact about Hercules Silver is that VRIC Gold, and I haven't experienced this in the last 20 years, VRIC Gold took a position of almost 20% in Hercules Silver within weeks after the discovery hole was published. And this is very remarkable, and that tells you quite a bit. Expect a lot of news on this company in the next few weeks or even next few days. I told you we're on the verge of the next bull market. Why? Because gold is trying to break out finally over the 2000, 2100 region. And we've been waiting over 10 years for this breakout. And finally, this breakout is happening in dollars as well. Gold has been breaking out in most of the other currencies earlier last year and the year before. And we even have seen one day in which gold jumped $70, $80. And I think that's a sign of things to come, because there's a huge demand for gold out there. We as a fund are metal agnostic. I told you we don't care if it's uranium, lithium or gold. But the gold space, the precious metal space is getting very, very interested, because we've seen this manipulation of gold. They try to manage and keep the gold price below 2,000 for the last years, and I think we now reach the point where they can't keep the gold price under 2,000 any longer. And once the gold price really breaks out, you can expect some very sharp moves. How is the gold price being manipulated? Well, this is done through the futures market. If you look at the open interest, this was in 2017, the open interest was highest in silver, platinum, palladium and gold. And this is an indication about the games being played by the usual suspects on Wall Street. But look what happened with palladium. Palladium was a huge open interest, but then we got a short squeeze in 2017 and 18. There wasn't enough palladium available for discoveries, so the shorts had to cover. Palladium ran from $1,000 to $3,000, went up 3x. And look what happened with the position, the open interest position of palladium. You hardly can't find it on this slide. And this shows you what a short squeeze will do with the traders who use the paper shorts, the future market, to keep the prices down. And you can still see how large the open interest is in silver, platinum and gold, still being manipulated lower. And one day we'll see the same, what happened with palladium in the silver market, the gold market and the platinum market. I just checked out yesterday what's the latest situation. Still silver, huge open interest. And you see palladium coming up again. The open interest in palladium is increasing. Why? Because we've seen the palladium prices coming down. So they're playing the same game again with palladium, and one day palladium will start to run as well. So we study the markets from a supply and demand perspective. We study the markets from a technical perspective, and we're always on the hunt for the next big discovery. Some major themes, macro themes for this year are listed here. Inflation is back. I think inflation is really the driver for strong commodity markets. We've reached the end of a 40-year deflationary downtrend. We have politicians telling us we have to change our behavior, we have to buy an electric car, and this will create a huge demand for battery metals. That will help our markets. We have this deglobalization trend, de-dollarization. It's the BRICS countries against the West, against the rest of the world. That's an interesting one. And we have ongoing shortages. A fight for commodities has started. It's all about security of supplies. So what's the goal? How high could gold run. If we see this breakout, you can expect a strong move up, just like the first and the second moves we've seen in the bull markets in the 70s and the 2000s. It could bring you easily north of $3,000 per ounce. As told, our politicians will make sure that we change our behavior, and because they're all united, the politicians, you're sure that demand for battery metals will go up the next few years. This is not only playing out in the West, it's also playing out in India and the East. So the demand for battery metals will be very, very strong. Lithium, copper, nickel will benefit. Of course, Elon Musk, as the largest producer with Tesla of of electric vehicles, he understood this already in 2019. And he already warned 4 years ago about the upcoming shortages in nickel, copper, and lithium. Silver looks explosive to me. I've showed you that the open interest in silver futures is the highest ever. Silver is the most manipulated metal worldwide. It's a very small market. And the good thing is central banks don't own any silver. So when we get the short squeeze finally, they will not be able to supply the market with central bank owned silver. They might use the ETFs, the physical, well, of course we have some large silver ETFs who have quite a bit of physical metal. Maybe they play games with those amounts of physical silver stored in the vaults. But I think silver is an accident waiting to happen. And don't be surprised when silver starts a huge run like we've seen with uranium. Uranium is another example of some kind of silver squeeze in which prices jump 3x, 4x in a relative short period of time. From a geopolitical point of view, there's a very interesting development. Zoltan Pozsar used to be an analyst with Credit Suisse. He wrote this piece in 22. And he said, we're witnessing the start of Bretton Woods III, a new world monetary order centered around commodity-based currencies in the East. And he also points out that more and more countries, more and more investors will start to flee towards commodities. And he predicts that we're witnessing the end of a paper-based system like we have in the West and the start of a more commodity-based system in the East. So this is another important development which will really help the bull market in commodities. You might be aware about the BRICS alliance. It used to be only Brazil, Russia, India, China, South Africa. They just welcomed Saudi Arabia and a few other countries. They doubled their size. And the fact that Saudi Arabia no longer supports the petrodollar deal, which Kissinger brokered in 1947, and now Saudi is teaming up with China and Russia, and that's a very strong sign that the world is changing and we're reaching this reset. Russia and China have been quite vocal about their wish to change the dynamics and to move away from a unipolar world centered around the dollar to a multipolar world where we'll see a parallel trading, financial, monetary system coming from the East. If we look at the shortages, Jeff Curry, head of commodities of Goldman Sachs, this statement shows it all. He's been in this market for 30 years and he's witnessing ongoing and developing shortages in many of the commodities. If we focus on copper, copper is one of our main areas of investment. Copper is needed for the EV revolution. The demand for copper till 2050, so that's only 26 years, the demand for copper will be more than double the amount of copper we've produced in the last 2,000 years. So demand for copper will be very strong. And as the CEO of Rio Tinto once said, we need to find a new Escondida every 15 months. Escondida is the largest open pit copper mine. Hercules Silver, they just found a new copper porphyry, and that might explain why the stock ran in the last few months. We're also witnessing some stress on the production side. Codelco is the state producer in Chile, and you see production almost falling off a cliff. So it will be very hard to come up with enough production to fill demand. And I think that will explain why prices will need to go much higher. Average copper grade is down to 0.6%. It came down from 1% some 30 years ago. And this explains why many insiders like Robert Friedland and also Glencore expect the gold or the copper price to move much higher in the coming years. CNBC recently reported that analysts expect a huge move for copper the next few years. And to end this presentation, I would like to show how large the physical metal markets will be around 2030. Copper will grow to a 400 billion market, yearly physical copper sales, 400 million. But watch lithium. Lithium will grow towards almost 200 billion. Less than 10 years ago, the total volume of all lithium traded in 1 year was less than 5 billion. So we see the rise of a whole new lithium industry, and that explains why 13% of our investments are in the lithium space. Thank you. My time is up. Thank you.